What's driving markets? Welcome to Market Take. Each week, we'll bring you our insights on the latest market and economic trends that are impacting investments. I'm your host, Natalie Gill, portfolio strategist at the BlackRock Investment Institute. This week, we reflect on 3 key lessons for 2026. Three main lessons stand out. Immutable economic laws limit policy extremes. Mega forces, especially AI, overshadow traditional macro anchors, and the rise of tokenized assets show a fast-changing financial system. US stocks held up in what turned out to be an eventful year. The April 2nd tariff announcement triggered the S&P 500's worst week since the pandemic, yet equities still ended the year with double-digit gains. Government bonds also delivered as yields fell despite some fiscal worries and persistent inflation. A softer dollar and Federal Reserve policy easing helped boost international stocks. Gold surged about 60% as investors rethought what diversification means in this new market regime, and the AI build-out accounted for roughly half of US GDP growth. We think the resilience of the US economy stems in part from our first lesson. Immutable economic laws mean the world can't change quickly. We saw this play out in real time as policy uncertainty weighed on investors, until one of these immutable laws, supply chains can't be rewired overnight, prevented the maximal stance on tariffs and helped stocks recover. Recession fears were front and centre at the beginning of the year, yet growth stayed resilient because mega forces, led by AI, outweighed the macro backdrop. The macro anchors that helped guide investors for decades, such as stable inflation and fiscal discipline, have weakened. In this environment, there is no neutral portfolio allocation. We think investors should focus more on owning risk deliberately instead of spreading it indiscriminately. That means owning a view on AI winners and losers and seeking unique return sources like private markets and hedge funds. The future of finance megaforce is evolving faster than expected as stablecoin adoption and the tokenization of assets rise. The 2025 Genius Act provides the first US legislation for stablecoins but bars interest payments, though a marketing rewards provision allows for yield-like incentives. This could allow for competition with bank deposits and money market funds. Here's our market take. 2025 was a year that pushed limits on multiple fronts, from constraints of trade policy early in the year to the advancement of the AI theme. We plan to keep tracking this theme into the new year and stay risk on. For details, read our weekly market commentary. Go to www.blackrock.com/weekly-commentary. Thank you for tuning in. If you've enjoyed this episode, subscribe to Market Take wherever you get your podcasts.
This content is for informational purposes only and is not an offer or a solicitation. Reliance upon information in this material is at the sole discretion of the listener. In the UK and non-European Economic Area countries, this is authorised and regulated by the Financial Conduct Authority. In the European Economic Area, this is authorised and regulated by the Netherlands Authority for the Financial Markets. Reference to the names of each company mentioned in this communication is merely for explaining the investment strategy and should not be construed as investment advice or investment recommendation of those companies. For full disclosures, go to blackrock.com/corporate/compliance/bid-disclosures.